good or bad is situational. This is the new digital era, as I would call it. There is nothing wrong in taking a debt for buying a home. First of all, going to an unorganized sector means it is lender of the last resort. When you have no credit history, you usually start with a shorter duration and lower quantity.
Are there any myths that you've come across in the banking space about loans?
Oh, plenty.
Hi, thanks so much for joining in. This is Big Decisions, where we help you make your most important financial decisions with confidence. I'm Alex Matthew. There are some very fundamental money-related questions that we've gotten answered on this program. Today's big question: is there such a thing as good debt? And if there is, how do you distinguish between good debt and bad debt? And while we're at it, we're going to seek answers to a few more questions. Is a zero-cost EMI truly zero cost? Is buy now, pay later bad for you? What's the worst kind of debt that you can take? And why are you potentially paying a higher rate of interest than your best friend? And who better to answer all of those questions and more than a former banker, the former group president of retail loans at one of India's largest private sector banks, Virat Diwanji. Virat, thank you so much for taking the time.
Thanks a lot. I'm extremely happy to be here and answering, and I will actually try and answer some of the tricky questions that you have.
So I thought a bit about who to call, and I thought that you'd be the best fit because a former banker does not necessarily have to keep any secret from us.
Yeah. That is true, and the second one means I'm a former with a very small lead time. So from that point of view, I have seen the things from the close in the ring in a very near past.
Absolutely. So let's start with that fundamental question, which is, I've heard it said that there is good debt and there is bad debt. From the perspective of a retail borrower, an individual borrower, how do you make this classification?
Look, first of all, good or bad is situational. And from that perspective, if you're going completely berserk and going on spending spree without keeping a tab on what your earnings are, then it turns out to be a bad debt. But many a times, the debts are good, which can help you grow in your life, and it can fulfill your dreams. Means there is nothing wrong in taking a debt for buying a home rather than paying a rent. You're better off taking a home loan. So those things, it's a personal decision. There is nothing, but anything in excessive, as you know, is bad. And from that perspective, when you borrow much beyond your means or without caring for the repayment, or for the purpose for what you're going. Means today, if you tell me that you're going to borrow for putting a bet on a IPL, then I would say it's clearly a bad debt.
Or borrowing to trade, which a lot of people have been doing.
Yeah.
And you've seen that, right?
Yeah, absolutely.
Because you were in the bank till July of this year, and there have been so many conversations about unsecured lending, which is basically personal loans that are given out.
That's right.
But how do you identify? Because ultimately it's a personal loan, and there are no questions asked. But there is an overarching limit. First of all, how is that limit decided?
On a couple of factors that are taken into consideration when you decide what's a quantum which we can give. As a banker, yes, that for the data that is in front of me, I can take that call. But how much you have already floated with some other financiers, or I'm blind to that.
But let's talk about that data, right? So, as a banker, what is the data available in front of you?
Right. First of all, first and the foremost is your credit score from the bureau. How has been your credit score? Good, bad, ugly. We have our own norms based on which we take the call. The second thing is, what is your source of income? Whether it's a salary or it's a business income. I can be running a mom and pop store, but I need personal loan. Then the predictability of the income. Means when obviously on salary it is more predictable than in the business, but you look at whether it is a predictable source of income or not. You also look at how many loans you have and what are the EMIs that you're paying just now. Does it fit in one more loan for you to really be able to pay without any trouble? What has been your past history? Whether your repayment has been regular or not. And how long is your credit history? The important part is, means I would have borrowed something for a small thing for 12 months, but repaying that is not a big deal. But if there is a credit history available to you for say 5-6 years, then perhaps you have better understanding of an individual. Okay. So these are on the factors which you consider. The other thing, when the loan becomes little larger, you may even look at if it's a secured loan that you're looking for, then what's the quality of security that you're offering to me?
So that is if there is an underlying asset. If there is, for example, if it's a car loan or if it's a home loan, then you look at, obviously there are certain institutions that specialize in this, and those institutions look at the market value of it, and usually you won't get the 100% loan. You will get what they say is the loan to value, which is up to 80%.
That's right.
So, but I'm curious about some of the things that you've mentioned. What if somebody doesn't have a credit history at all, which is a lot of people, young people don't have credit history. How do you then determine how much of a loan you can give?
Look, there you get into first what kind of education you have. You're coming out from a top B school or a engineering college, perhaps you know that you're going to be employed and you will earn X quantum. So from that perspective, I know, and that's where the predictability comes into equation. So for those cases, it is relatively easy. The other part which you take into consideration is, means you may want to start small, for what purpose that loan is. And hence, when you have no credit history, you usually start with a shorter duration and lower quantity.
Okay.
But all those, means duration and quantum varies based on what we analyze in terms of your education, where you are employed. Means if it's your first job, if you are in a big company, perhaps it is easy for us to really give you the loans.
You've seen 30 years of lending, particularly in the retail space.
Yeah.
How do you think that has changed over that period? Because I've heard conversations of my parents' generation where they say that it was a relationship with your banker, where you would walk in and, depending on whether the banker knew you from the locality, it would be easier for you to get credit. Now it's changed entirely, hasn't it?
Look, you see, this is the new digital era, as I would call it. You leave footprint on anything and everything that you do. Your credit score says, if you don't have a credit score, I might have an access to your bank account. I see what is the quantum of credits and the debits you are doing. Even I can analyze the debits and say that where you are spending, means how much is on food, how much is on entertainment, how much is on buying goods, luxury goods, so on and so forth. So I have a complete, means your bank statement in a way is equal to the X-ray for the doctor to figure out whether you are hale and hearty or there are some likely problems that can crop up.
But is that something that the banker does, or is it something that another agency does that the banker seeks?
No, means you can, for this kind of an information today, you now have account aggregators who can give me a complete data of all your 4, 5, 6 accounts that you have in the various banks. Okay. So, or in the early days when this digital thing was not possible, perhaps we were asking, and the customer used to choose and give us only the one which is his largest or where he is wanting to show us something. But all said and done, we certainly looked at those transaction data and really took a call on how much quantum that you can fund to the customers.
Okay, so let's talk about certain aspects. Credit score is something a lot of people focus on, and there is enough information about it, but I do want to touch upon it. Are there instances where a credit score can be maybe not giving you the entire picture? And what I'm trying to get at is that if for some reason a credit score has gotten hit because, say, for example, a buy now, pay later, you missed one installment, but you've actually been creditworthy in everything else, your periodicity of the earnings that you have are regular, will you make exceptions and provide loans at a certain interest rate? Or is that credit score being not pristine, a damning piece of evidence?
Look, first of all, missing one payment for a couple of days or those things is not going to impact your credit score by a big margin, which can change my decision of go, no go, means whether to fund you or not.
Yeah.
Okay. But at the same time, when I look at the credit score, it gives you a complete detail that how many ongoing loans are for in all those loans, what has been your payment regularity, means have you, and it tells you that if you're paid on the due date, it is 0. Then if you're paid 1 day late, you even get those details in the credit report. So you have a fair bit of an view of that person. Means many a times we come across many customers who you find is repaying the loan every 4th or 5th day. The continuity and the quantum of his earning has not changed, but 4th or 5th day. These are the customers who lack discipline.
Right.
Okay. And when you lend, you have to be careful with that, okay, this gentleman or a lady lacks discipline, and hence you will have to do something. And now in this, again, in the tech world, I might send you an SMS or a WhatsApp message saying that, hey, your payment is due in next 3 days. Make sure that there is enough balance in your account.
Right.
Or I may just send you a voice blast and say that, okay, your payment is due tomorrow. Hope you have enough balance. So people who are lacking on discipline, at least the intention is there to pay, but it is pure discipline lack. So you can take care of some of those things in this thing. So coming back to your question on saying that credit score, but if it goes below certain threshold, that means something.
What is that threshold?
Look, it depends on what kind of lending that you want to. But usually 650 is the cutoff beyond which you would want to go deeper and deeper.
Okay.
Okay. And many a times, you see, and you said that you may not have a credit history where your credit score is -1.
Right.
Now, I have to take a decision based on other parameters. Where do you stay? Who are your parents?
What your cash flow
studied?
is. What your cash flow is.
That's right. That's
So if it's 650 or below 650, then from the perspective of the banker, you would then have to give out the loan as an exception. Is that right?
Yes. Yes.
Okay.
Yes.
So let's talk about certain other aspects then, because
But let me correct. Means, as I said, yes, to the fact that it does not mean that I don't give loans to the person who has a -1 score. Means he has no credit bureau hit.
yeah,
Okay.
but there are certain other parameters that you have to look at.
There are other things in the criteria which we will take into consideration.
Okay, so let's talk about one of the earliest products that individuals take on if they are aware, and even if they're not, because credit cards are so easily accessible. You've seen the data. I'm sure that a lot of my viewers have seen the data of the number of credit cards that are going out now. What, according to you, is alarming or bad use of credit cards? And how easy is it for you to slip into a debt spiral? If you can also describe that, what is a debt spiral and how easy is it for you to slip into one?
Look, debt spiral is a very, very bad vicious circle that an individual can get into it. Now, I would classify controllable and non-controllable reasons means on this. And when I say non-controllable, means suddenly you have a medical emergency, you have some accident in the house, or some reason beyond your
Control,
thought,
yeah.
and for which you need to borrow, okay, and in which the quantum is on the higher side, and that's the stage where you don't think about what you call how we are going to repay. We will look into it, dekh lenge baad mein, but just now you need a money kind of a thing. You would do that, but still it is unavoidable, and that's why I say uncontrollable.
And usually it's an emotional decision.
That's right. The more worrying part, and which can be avoided, are the controllable factors, and where I think the credit card is the villain of the piece. Means, you see, on a credit card, it is very easy to swipe and just go on and buy. You usually, maybe the tendency of people to go and buy more luxury goods. You have gone to buy a 45-inch TV, you may end up buying a 65-inch TV.
Yeah.
Now, these are the things where you spend aimlessly without controlling. Means the basics of your personal finance, which tells us that you need to do X percentage of your money, of your earnings as savings. Your EMI should not cross 30% of your total income. All those basics you give up, and then you just go on spending spree.
Yeah.
A stage comes whereby you're not able to repay means on the credit card, on the due date, then you go into the revolver game. A stage comes.
What is the revolver game?
You see, where a minimum amount due you have to pay. So
Okay.
you have 100 rupees due. I will come and say that you have to pay 5 rupees and move on. So
But you're paying interest on the remainder.
absolutely, absolutely.
And interest on credit card debt, how much can it go up to?
Means today it is anywhere between 3 to 3.5%
Per month?
per month.
And so how much does that work out to per year?
36 to 42.
36 to 42%. And so therefore, that is the reason why you're saying it's the villain in the piece.
That's right. That's right. And today, you see, you have a good credit score. Okay, you will have at least 3 or 4 institutions knocking on your door to say, please take my card, please take my
Yeah.
card. So, and you feel really happy about it, saying that, look, I'm so good that there are 4 institutions who are willing to give me a credit card. And as a matter of social pride and to show off to your friends and family that I have 4 credit cards in my wallet, you would take all 4. Then you start using them, and which is where the problem really creeps in. And he says, Asha, theek hai, you use this card and buy. Now, eventually you have to repay the money. And then a stage comes whereby you have used the minimum payment for all the cards that you have, then you will go and take a personal loan to repay this. And
Okay.
that's how you get into...
Because the personal loan is cheaper than the credit card debt.
That's right, that's right, that's right.
So is that the way to extricate yourself?
No. For extrication, we will come to that in a minute. Okay. But the first of all is falling into this means the debt spiral. This is the thing. Aimlessly, without looking at, thinking about future, you just go and spend, which is the controllable. You can always control. Even on the secured thing, I want to buy a car. I can decide. Can I pay I have the EMI
or
ability
not,
to pay. Accordingly, I'll take the call.
Yes.
Okay. The second part, which is again a controllable, is to borrow money and then play on the stock market, bet on the IPL, crypto,
Or even derivatives.
on derivatives, and means anything that where the greed, human greed takes over, and you believe that the return that you get by doing this will be higher than the rate that you will pay for as an interest.
Very important perspective, yes.
And that's where these 2 factors, which are controllable as a human being, if you really follow the discipline in that, perhaps the probability of you getting into a debt spiral is lower.
A follow-up to that, since you mentioned use of personal loans on derivatives and on trading, does a banker come to know that this is the end use to which the user is putting it?
Look, we certainly, when you give a personal loan, very few people actually what you call know that you cannot use the personal loan for investing in stock market.
Or it's not allowed?
It's not allowed. It's not allowed. And now the regulator is asking the bankers to really track where the money is being used.
But can you do that?
You can. Means what you call, you take a personal loan from me and then you issue a payment to any of the broking company. We'll come to know about it. As I said, your bank account is an X-ray.
Yeah.
So I can easily...
But then what is the recourse that the bank has?
No, so you go and tell that gentleman, this is not allowed. You recall, and you, in fact, you can even recall the loan. So there are certain actions which you are forced to take even to that degree. But when it's a small personal finance loan, and if he slips in, it is very difficult for bankers to really track on all the loans.
So, okay, so then what are the other aspects? Since you mentioned it's illegal or it's not allowed to use it for investing, what else can you not do?
Buying land.
Oh, you can't buy land, okay. So you can't make investments with a personal loan.
That's right.
Okay. So, but now can we talk about how to extricate yourself from a debt spiral, or even at various degrees, right? You're slipping, and you're slipping sometimes very slowly. You don't even realize that you are, and then it gathers pace very suddenly. How do you extricate yourself?
Look, all said and done, prevention is better.
But then assume that you are in a situation.
So now, as I said, if you ignore all the basics of finance and you still go ahead and you go berserk on those controllable factors that I mentioned a little while, the first and the foremost thing is you try and borrow a loan which is at a lower interest rate.
Yeah.
And the reverse law of compounding starts playing in.
Right.
Okay. Now here one of the thing is means you you have an unsecured loan.
Yeah.
You have what you call some asset to offer as a collateral security on which you will get a lower interest rate,
Yeah.
and perhaps you can help yourself to try and meet all your requirements of EMI without any problem.
So a question would be, you can take on a loan against a mutual fund unit, for example.
Yes.
So if you have large outstanding credit card debt that you need to get rid of, is that an option that you
Yes.
can consider first before you try and get a personal loan?
Yes. Yes.
So
you
try secured
That's right,
first.
that's right.
Then go to unsecured.
Because you see, unsecured, and if you have so much of outstanding, perhaps probability of you getting at a lower rate does not exist.
So you'll have to pay a premium, and that's where the differential rate of interest comes into play.
Comes into play. That's what I meant.
So in what situations would your rate of interest that you pay on any loan go up, and how is that governed from the perspective of the banker?
Look, it's directly dependent on the risk that I am taking. You have 3 EMIs outstanding, okay, and you are coming here to take the 4th one. I know that there is a probability that you may default, and since the probability of default is high, I will try and charge you a higher rate. And it also, because you are desperate, you need money to really square off and not be seen as a default customer, you would be willing to pay, but gradually you are slipping into the debt spiral.
Okay. Now, another aspect is, you mentioned 4 credit cards. From a prudent practice, and somebody who's looked at this industry for so long, how many is too many? Credit cards.
No, anything more than 2
is too many.
Is too many.
Okay, so, but let's talk about the limits on that credit card as well, because oftentimes your bank will will set a limit first of all, and based on your usage, it'll keep increasing it, and you don't need all of that. You have internal, systems in place where you can actually restrict it and say, I'm only going to use 20%. Is that the better way to go about it?
Yes, you see, today the bankers give you complete flexibility, okay,
Yeah.
based on your credit score, where you're working, your earnings and all those things. My tendency as a banker is to give you the maximum limit, okay. So I give you a X limit, but you can always go on to the mobile app or on net banking and say that, okay, while I have been given a limit of 5 lakh, I want to put 1 lakh as a limit, and I can stop there. If I need it to go beyond that, I can increase it to 2 lakhs, but again after bring it back to 1 lakh. So you have the flexibility to control the limits that the bank has given.
And it's a good idea to do that.
It is always good idea to do that. You see, ideally you use a thumb rule. That means I would not tend to go beyond 40 to 50% of my limit that my banker has given as a credit card spend.
Because it could negatively affect your credit score?
No. Means as long as if you're paying on the due date,
it doesn't matter.
It doesn't
you can
matter.
be using 100% and it's still fine.
But when you use 100% of your limit, the banker starts getting little jittery.
Because okay, fine, because you're using so much credit on an ongoing basis. Because that also seems to suggest that you don't have enough cash flows to take care of your
That's
regular
right.
requirements.
Or you're trying to live beyond your means.
All right, so Virat, we've spoken about the formal sector, but there's also the dark underbelly, which is the unorganized sector, and this is oftentimes people that are not earning money in their bank accounts. They're earning in cash, and so they don't have access to the formal sector. But I've heard, you mentioned 3.5% for credit card loans. I've heard interests go as high as 10% per month, which is shocking to say the least. I know that this is not something that will likely reach these people, but then maybe the people that are listening in can aid them in some way. What advice would you give to somebody who is stuck in some situation like this?
Look, first of all, going to an unorganized sector means it is lender of the last resort.
Yeah.
You have to think it in that form. Because today, by and large, means you have banks, you have NBFCs, you have fintechs, you have small finance banks, everyone willing to lend. So one is that okay, if you are so bad and nobody is willing to lend, or you are living in a geography whereby none of these financial institutions have started giving loans. So these are the two reasons where you will have to resort to this unorganized sector. Mind you, they are small and scattered. They are not regulated, means they are not registered with any regulator or government. There is hardly any documentation, and if at all any documentation, it is highly in favor of the lender. So I think these are the risk that you encounter, and the interest rates, as you mentioned, it's so high.
But suppose you get trapped, and since none of this is a regulated entity, is there a recourse to go to the cops?
Nothing.
You can't go to the cops?
You can go to the cops and you say that this fellow bit me up. Now,
Right.
What is means cops can register a case saying that you bit me up, but the fact of the matter is that you bit me up because I didn't pay you the.
Okay, so let me pose a slightly different question. I know of a case where the individual is earning about 30,000 rupees in cash, but in various households, and does not have access to formal credit. Is there some way that they can get access to formal credit?
Look, I think in metro and urban locations, I think that has become possible. Means, you see, gone are those days where, and I said in the beginning as well, that you don't have any credit hit or anything. What purpose you want? What is the quantum?
Yeah.
And what you call, means I can tell you today, my driver has got a home loan.
Okay.
Okay, his only thing was, means the gentleman came for doing a personal checked with me, saying that how long he has been working with you, what is the salary that you are paying, and based on which he has been given a home loan.
So can you sign off on a document? So for example, if a lender calls you up as the employer of this individual who you're paying in cash and asks you to sign off on a paper, what's your liability?
I'm not giving a guarantee. I'm not giving a guarantee,
Right.
but I'm giving an assurance that, look, this gentleman, means what you call, for years that he has been working, what is his basic, and then they take a call.
So you're verifying information.
That's right.
As long, and you, so from that perspective, if you are verifying, somebody calls you, you can sign off on that document as long as you're not standing as guarantor.
Guarantee, yeah.
Last question, and this is a bit of a fun question. Are there any myths that you've come across in the banking space about loans?
Oh, plenty. Means the first and the foremost is, the first myth that I came across is that banks can only lend.
Okay.
That's the first one. The second one is, you always need a good credit score to get a loan.
And we busted that myth.
Yeah. The second thing is that if you take a loan, your credit score will get impacted. That is the other myth.
Negatively.
Negatively.
Okay.
Women don't get loan. You can't have two loans run simultaneously.
Okay.
Okay. These are few which.
And we busted most of these, which is very interesting.
Yeah.
So I'm glad that we have. Virat, thank you so much for joining in, for speaking to us on Big Decisions.
Thanks a lot. It was a pleasure.
So hopefully this conversation has been insightful and educational, and spread the word. This is going to be useful to a lot of people. In the meanwhile, there's lots more coming up on NDTV Profit, so do stay tuned.